So what this is the exponential growth curve is just kind of a compound interest growth curve. It shows what happens when you compound something at 7% over time. And the black line, that's the lighter gray line that kind of goes up, smoothly in an arc. And the black line is the Fed balance sheet, which is a good proxy for the money supply or the reserves that they put into the system that the banks then lend against and create M2. And what you can see here that I think is fascinating is that every time the Fed balance sheet or the money in the system, because we've got debt growing more rapidly than we have underlying money supply, or GDP, you get to these points at which there's not enough money in the system to service the interest rate and the debt. And so you can see what happened. The black line slipped below the growth curve in 2008, and bingo, you had the panic of 2008 and the GFC. And of course, they fixed that very quickly, and they had what I call the first big print, and they took the Fed balance sheet from 800 billion to 3+ trillion. But then, of course, they realized that was a problem, and there was some inflation and other issues. And so they came in and they started to tighten it again, and Yellen started the process, and then Powell added to it. And that took you into 2019, when in the fall of 2019, the repo market blew out and went to 10%, and they realized bank reserves were too low. And he did a pivot, and he turned around and started printing money again. And then 3 months later, COVID hit, and they really hit the money printer accelerator. Up we went from, a balance sheet, Fed balance sheet of 3 trillion to, I think at its peak, it was close to 9, maybe a little over 9 trillion. And of course, that led to the 9% inflation that, wasn't transitory, because Powell lied about that, and brought us back down to now 6.5 trillion. Look at what's the most interesting thing about this chart to me is look at where the two lines are right now. We're back to the point at which the liabilities are below the parabolic growth curve. And the last two times that occurred, it led to a quote unquote big print. And so to me, that's why I say this big print is imminent. I mean, it's going to happen. It's got to happen. And I think, Luke Roman says 6 months. Lynn is a little more thoughtful about it. She says, well, we could just have a gradual print. And she may be right. But I tend to think that more likely what will happen is once the floodgates open, they're going to really open. And you kind of see the indicator of all that stuff. I'm going to stop sharing this now. You kind of see the indicators of all that going on, because you've got Kevin Hassett is going to be probably appointed as Fed chairman, and he's talked about much lower rates. You've got Powell attacking Fed governors. I mean, they threw out Bostic for insider trading. They threw out Kruger for the same thing. They're going after the woman who lied about her mortgages. And he's basically trying to get control of the Fed board. And you've got Bessent, Treasury Secretary Bessent, out there trolling, the whole Fed board, saying, what's the Federal Reserve? It's universal basic income for PhD economists. I thought that comment was hilarious.
Great line.
Because he said they always get it wrong. If the Federal Reserve was the FAA, nobody would fly in airplanes, because these people don't know what the hell they're doing. And he's right. And so, basically, it's clear to me that, with an election coming up next fall, and, Powell's term expiring in May, Hassett's going to get in there, and they're going to run this thing hot. And, the good news is the economy will probably hold together, and the stock market might even go higher nominally. But the bad news is that's going to be massively inflationary. And gold has already smelled it, which is why gold took off, starting in September, and went from 2,600 to 4,400. Silver is smelling it. I mean, it's doubled in the last year, more than doubled, actually. And Bitcoin, Bitcoin has been a little bit of a laggard, and a little bit sensitive to this tighter liquidity. It's got a more sensitive liquidity-driven price to it. But my sense is that, if you look historically, another chart, I'm not going to show it, but I've shown it plenty of times on my Twitter feed. What we see is that gold, because it's more widely distributed, tends to move first, and then Bitcoin follows. And so, to me, gold has already sniffed out the monetary debasement, and it's moved heavily. And what's going on right now is Bitcoin's in the process of starting to follow.